What's up, everyone? It is April 21st of 2026. Just going to review this swing strategy here. Did I call it something in the last video? I don't think so. Maybe market structure? Yeah, market structure via breaks. Okay. So yeah, we are trading market structure via the swing breaks. Uh, some things we want to make sure is that when we're trading, there's adequate distance between the next swing level. So swing level, I have one set to 20, and I have one set to 3. All right, and this is a swing indicator that I made. You can download it or you can add it to your charts for free on TradingView. I'll put a link in the description to it. But it has alerts, and here's how I use it so that you can know how to use it. So first things first is I need the 20 swing to form and then be broken. All right. So here, this orange line is the 20 swing high. This is a 20 swing low down here. My criteria is that price has to bust through or just test one of these swing 20 areas, and then it has to, in this case, if we're looking for a long, it then has to make a swing low. You're looking for the first swing low to form after the swing high is broken through. All right, so this is what I do. I will here. Oops, I don't need that. Add alerts. Okay, so here is how I use the alerts. I will set this for new swing high to be broken. All right, and also set one for swing low to be broken. And then what I'll do is I'll go to my other indicator. It's the same indicator, just set for a 3 strength. And what I'll do here is I will do, so once the swing high is broken, I will go in here and say new swing low. I want to know once a high has been broken, I want to know when the new swing low forms. And then what I want to do once I'm alerted about that is set the alert to swing low broken. This is so I don't have to sit at the computer all the time waiting for this. The alerts will tell me when to be alert, right? New swing high, okay, you have my attention. New swing low has formed. Okay, now I'm at my computer because who knows when it's going to be broken? It could be instant. And then I have an alert again for the swing low to be broken, so that if I'm on a different tab or playing a game or something like that, I'll be notified that hey, the condition is starting to be met. You got to switch to your charts, dude. Okay, so that's how I use it. In the case where a swing low is made and broken, what I'm doing here again, uh, new swing low, or I'm sorry, swing low broken, I get alerted. Okay, now I want to know when a new high is broken or a new high is created. I'm sorry. So price comes down, breaks the swing low broken. Next step, I need a new swing high on my level 3. And then what I'm doing after that alert is I'm doing swing high broken because now that's what I'm looking for. I want to basically say, hey, if price closes above the first swing high after sweeping a swing low, that is where I'm looking to trade. All right. And so I'm going to start highlighting where I'm looking to trade. So this is the end of the day, so I wouldn't really take this, and I wasn't given an opportunity here. But swing low on the 20 strength. Again, 20 is the orange color here. Is broken. We then wait for swing high on the 3 strength to form, and then we're looking for a close above that to show that the reversal is actually coming. I can show you this example here that we just had. It's 5:48 p.m. my time. I'm in Arizona. Well, this is when the trade was. Excuse me. It's actually 6:17. So this would be 8:48 p.m. Eastern time, I believe. Yeah, 3 hours ahead. And again, what I'm doing here is I'm saying, okay, the next swing low is all the way down here. So theoretically, I shouldn't really face too much resistance here. Granted, there was this swing low, I'm sorry, this prior swing high here that worked as support. But you'll see when I delete this line here that my first target, which caused me to break even, was right here at that level. So this was a safe trade to take because really the movement that I was expecting at minimum is this swing low to this swing high. And that's what we got and a little bit more. This happens multiple times per day typically. It works really well in the overnight hours, or just anything. Well, it just works well altogether. So I'm going to go here. We're going to look. All right, we have a swing 20 low broken. We create this swing high. It's the first high created after the swing low is broken. We never close above it to give us a chance, and we never break this swing low to give us a new level to look at. This is about 5 a.m. in the morning, my time. We break this swing high over here. The first swing low that we form, we break that swing high, and then the first swing low we form is right there. We then wait for a close below it, and that's the signal to enter because we are good from here all the way to here. You'll see that this swing 20 level over here is below. So we closed below that one. So the next area of potential support is going to be somewhere down here. That's easily within our targets. So that's a great trade. And that's at 5 o'clock in the morning my time. So that would be 8 a.m. Eastern time. It's good. I like it. Okay, here you'll see we took out the swing high and we didn't create a swing low until all the way down here. That move is basically already done, so you're not interested. Up here, it happened pretty quickly after sweeping this level here. It was only, maybe 20 minutes at most before we're coming back around. Here, it's just big long play to the low already. Here's another one here. Let me go. I got to replay. The look back period on the it's not very far. So here you can see we broke these two swing highs here that were from earlier in this session. This is not the New York session. This is still, I guess, ET8 session, extended trading hours. This could be Asia market maybe trading at this time. It's anyone's market. I do stay awake sometimes and take these trades. But same thing here. We got a break of a swing high. We have a swing low form right there. We have another one form right here. Ignore this because it still needs to close past this lower one here. So that's what I'm focused on. We get that close right there, and bam, that is our signal to enter. I personally like getting a pullback to the swing that we broke for an entry. And then you can set your targets as based off the candle close. If you want. I mean, you could target down here, whatever. Now you might be wondering, what about these here? These aren't swing 20s, so I'm not worried about this really stopping price. You can see it actually did give some support here to price temporarily. But ultimately, I'm not going to sweat it over these lower swing strengths. Over here, we broke the swing low, and then we created the first swing high. We then waited for a close above it, which we got right there, and we have from here all the way up to here. This swing 20 right here you can see is also below our close, and this led to a great upward rally for the next few hours, the next 3 hours or so. I don't stay in the trades those long. Once I have more buying power, I'm going to start doing that, where I can capture most of my profit at like 1.5 R and then just have a runner to go like, I don't know, 100 points each trade, try to get. I don't know, figure something out. Maybe just target the next swing 20 high or something like that. Who knows? We'll do something. Have fun with it. Swing high is hit up here. Swing high is swept. We then have a new swing low here. We have this huge gap from here to here. However, you can see we do have these swing 20s running across, which blocks this candle in. So we wouldn't want to take this trade right here because this swing 20 is potentially going to act as support, which you can see it does and turns price back around. So don't want to take that trade because basically our trading window is this, and based on the close of this candle, we don't have anywhere to go. All right, over here, more or less the same thing. I'm just going to keep showing you guys examples because this is, I'm not going to say anything. It just, it's a fun strategy. So here we take out the swing high, we take out 1, 2, not that it matters 2, just one's enough. We take out that one. Our swing low, we don't really have one form that's the strength of 3. So this isn't really a good example. What I do like about this one is there's clearly some structure right here that caused the sell-off to pause for a second, and then once we broke below that, price kind of tumbled, not a huge amount, but enough to take a 1R or a break-even trade on that one. But that's not really even or setup. So this is something I need to just ignore. There's plenty of other opportunity. All right, let's see. All right, this is the New York session. What do we have over here? All right, so price comes down, breaks this swing 20. It establishes the first swing high. We never close above it. We break through this swing low. We establish the next swing high that we establish after breaking that swing low in these ones as well is going to be right here. This candle, normally based on my other strategies, is not something that I would want to take because of just how ugly it is. Our trading window really is this here because we do have this swing 20 here that could potentially act as resistance. And it does to some degree, but ultimately price slowly works its way up through. But even before that, I already hit my target at 1R, 1.5R. 1R we're going to break even anyways. 2R hits. I don't have enough contracts to be trading where I can take 3 targets most of the time. So this would have been 1R, 1.5R, and would have been out. Let's see. All right, we'll just do this session here. You can see we broke the swing high. First swing low after the swing high was broken just does not get closed below. And it just keeps doing that. And this is how the market moves. It uses these swing points as support, and it keeps going. If the swing level that forms after a higher swing level has been broken, that typically shows you there's going to be a breakdown, a reversal in price. And that's what we are targeting. So we take out a swing low here of 20. The first swing high is established here, but look, we failed to close above it that time. And after we kind of failed to close above it, really twice or so, I'm not too interested in it. Let's see how this would have played out. The swing high is this one. We have a new one that's made there, so then really our trading window is more like this. There are these swing 20s over here. So let's see, if we do take this candle, where does this candle put our target? It puts our first target, our break even trigger, our 1R target, basically within safe confines. If it's going to reject here, I should be able to trigger it, or I'll even just manually kind of go to break even as it approaches this area here. And you can see your first target would have been hit. So not a bad trade at all. It is what it is. And ultimately, it's the right idea, just not the right time, right? It does ultimately go up, but not as fast as we would like. Let's see, it looks like we have maybe some more examples back here. We sweep the swing high. We don't make a new swing low till down here. And again, at that point, the reversal's already mostly over. So we're not really going to look for a breakdown of this here. We got a few things highlighted over here. Let me clear these so we can kind of work through them together. Let's just start over here. So swing low is, why do I have this marked? That should not be marked. I think that was before I had the indicator. I was just manually going through it. So we break the swing high. First swing low we set up is here. This one kind of becomes obsolete once we create another swing high and then another swing low is established. So really, this is the swing low from the highest point that we are looking at. Does that make sense? I hope that makes sense. So like, yeah, this was a swing low here, this is a swing low here, but this swing low didn't come after immediately sweeping the swing high. This one did. So we have swing high and then the first swing low. This didn't sweep the swing high, so we don't care about that swing low. This sweeps the swing high. This one does again. that becomes the first swing low. And if you look, we do have this swing low here to be worried about. So in that case, we would see this candle here does close below our area. That came out weird. Our area, but it still closes within the confines of this swing 20. So we're not actually going to take that. We're then going to look instead down below this swing 20 and really this structure here, which would come out to that candle. However, by time that candle closes, you already have a new swing point. So when this starts happening, it's best to just kind of walk away because market is not moving with the momentum and tenacity that we're looking for. It's kind of doing this weird slow consolidation, breakdown, back into consolidation kind of thing, and that's not what we want. We want relatively quick plays with using momentum and market structure breakdown. What you can do too is you don't have to rely solely on whether the swing 3 shows you a level. So what I mean is you still want to use a higher strength, like something like swing 20. And if you see it breaking down, sweeping these prior lows, you can start to look for reversal through structure. And the W and also the M breakouts are great. So W's are used for longs. You make the left side of W, you start to go up, you make the midpoint, you pull back a little. Here it's not as obvious, and then you break through this area right here. Now this isn't a swing level 3, this is only a swing level 2, but this is something that you can look for and potentially trade. The issue with this is it's just such a massive candle, it brings you up into potential resistance, which you can see is exactly what happens as price moves sideways for about an hour. So although you can trade those, it's always important before you take the trade to mark out where you're safe to trade. And that is going to be the area of the structure that you're looking to break, the lower swing level, and then to the next swing level of equal strength or the stronger one, whatever is closer. And in this case, if we're here at this point, the next swing is all the way up there. Yes, but the stronger one is down here. And so this is the area you're safe to trade in. So either you want to close beyond this, and if you close before it, you don't want to really take the trade. And in that case, would recommend not taking that because this one move exhausts a lot of buyers, and a lot of sellers then typically step in. You get pushed sideways, and then you're waiting. Who's going to take over? But all right, so I'll just wrap it up with that. Let's just find one more good example. One more. This gets broken down here. 1, 2, no, that wouldn't be one. Okay, I think right here we got something. So we break swing high, form a swing low, never gets closed below, create a new one, new swing high, we get a new swing low. Again, same thing. We do close below that new one, but we also close within the other one. So we're right back into the zone where buyers took over twice before. I want to be closing below that to really know for sure. All right, create a new swing high here. We make a new swing low. We close at it, and then that is not going to convince me that I want to go short here, so we don't have that for a trade. Learning to say no to trades is one of the most valuable things that I am putting into practice. It's not easy, especially when you're waiting and waiting and waiting. You just want to take that trade, but I tell you, if you can get the patience to just say no, that's a gift from God. Let's see. It's new swing high, that's our swing point, new swing high, that's our swing point, new swing high, that's our swing point, new swing high. We don't get that, but we do, again, kind of have this little pullback, then an immediate break and close below. Would I take this? Not necessarily, because I like to try to be as objective as possible, and this wasn't a swing level of 3. However, it's still clearly breaking down the structure of the upward trend. So now we're breaking down to a downward trend by just reversing what we do in an upward trend. We have the swing points that we use as support. We break through the previous areas of resistance. We're an upward trend. You know we're in a downward trend when we then start breaking down below the areas that were previously support, which would have been this candle here. Something like that. So you don't always need to wait for the exact setups like I often do. You just have to know what you're looking for and kind of understand why you're doing what you're doing. So yeah, if you want this indicator, just go to the link that I have in the description and you'll find it and you can add it to your chart. And if you have questions, just feel free to ask.